All right, so I welcome you all on today's episode two for the Forex game plan on Trade Iberry. As I said earlier on, we first dealt with the US dollar index, and we are yet to go on the yen and follow up with the US D JPY and then cut JPY. All right, so as I said, if this is your first time of watching this video, kindly subscribe or follow and like and give your comments as well. Remember, the description below down there you get to find all our Telegram channel, our YouTube channel, uh, the links. You follow our Instagram channel. You have all our social media links on the description below to follow. Remember, we give daily free trades. We give daily free trades as when as the market shows it. As when as the market shows it. So sometimes within 4 or 5 days we don't give out. If you don't give out, doesn't mean we are not paying consistent. We are not paying attention, or we are not being consistent in the market. We are being consistent in the market, but then the market is not going according to our plan, because here at Trade Iberry, what we follow is very simple. We follow the market to move into its bullish or bearish trend, and then we wait for the market to retrace, and then we take the trade. We don't trade in any time of the market. So without wasting much time, let's go into the yen. All right, so the yen has been very, 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 very good since last year, where the higher low broke here, and then we had a new higher high here. We came down, we had a new higher low. What did the higher low do? It went up, price went up in an impulsive manner, came down a little, and then went up to break this low. I mean, that was a lower high and then a lower low. Price went up to break this lower high, and then it turned the market to a higher high. Right then we traced, we had a new lower, we had a new higher low, and then we created some equal lows down here. Price then pushed up, and then we created some equal. We created some higher high here. We created some higher high here. So let me take it back again. Price was here as the higher, as a lower high, came down as a lower low. Price went up, broke this lower high, and then we had a new higher high. Price and retrace. We had what we call a new higher low. With equal lows down here. Price and pushed up, and then price and retrace again. So what did we see here? When price retraced, price went up again, we were thinking probably we'll be getting a new higher high. But unfortunately, when it checked down here, when it checked up here, price wasn't able to wake up to where we were expecting. You see, price couldn't cover the whole. Let me open it in a very large way so that you have a look at it. All right, so there is it. We realized that price couldn't wake everything, so we still have we still have yes, we still see there are some few space there, there's some small, so price couldn't wake price couldn't close its body on the on price couldn't close its whole body, so it means we still have here to be our higher high. And what the price? The price came back straightly bearish and impulsive way, then started with some corrective ways. Well, I mean, going in a corrective way. And then what did we see? Another impulsive up, and then finally price break. What's the higher high? And then created a new higher high here. So at the moment, here is our higher, but not confirmed higher high. But then we can confirm that here is our lower, higher low. But then we can confirm that here is our high high. So we see lower time frame retrace. All right, so when you go back to the 4H time frame, yen has been very, very, very smooth. All right, so this was the previous lower, that was a previous higher high, came down and went up, and we created a new higher high. We had a new higher low. Price came down. We had a new higher low, and then price moved up, and then we now have a new higher high and a new higher low. So price is trading within this within this area here and here. That is where price is trading within the 4H. So what do we see here in the 4H? 4H come impulsively and then there's some few corrections. All right, so let's open the chart very well so that we can see. All right, so price came down. When you take the Fed, price came down into the 100% retracement down here, and then it shows with a corrective move on the in the 100% retracement shows automatically an upside trend, which you can place for a buy, but then you still have to be focused because it doesn't break structures. Because here at Ikeberry, trade Ikeberry, we look at breaking up structures before we take a trade. Yeah, as I repeat again, here at trade Ikeberry, we look at price breaking structures before we take a trade. But at the moment here, what did price do? Price broke structures, and then we were expecting some corrective move, but then price came back impulsively and did a corrective move right here. So it means that price met our game plan. So price then came back into this imbalance, and then what did we do? We have to what we can take a trade straight from buy. Then what did price do? Price went in an impulsive way, not even a corrective way. Price went in an impulsive way, and what did price do? Price failed to break, or price failed to break this higher high. So still this is the higher high on the 4H, and then still this is the higher low on the 4H. What do we expect price to do from here? We expect what we expect price to do is either we expect price to go above to break this higher high before it retrace. Let me see. Yes, still price didn't break. Still price didn't break this. It still has it that way. So we expect price to either move a little bit up, and then we expect a little bit retracement down there into some areas of interest down here, down here, or some areas of interest down here too as well, which probably uh, forms some how do you say it how do you say it imbalance too as well. You know, this imbalance has been taken, so we have some few imbalances. So probably this this can form as a liquidity or as an equal low down here, and then price will take from this previous structure. Remember, 4 hour and 1H are the same on the time frame. You see, so when it comes to the 1H time frame, we still have this as higher high, and then this as higher low. Price came down corrective and then straight impulsive, and then what did we see? Price then came corrective down here, very nice corrective way to take a trade. But then what did price do? And then price went up, as I explained on the 4 hour. Price went up, and then we have so many imbalance. You know, we have some imbalance here. Let me take my pen. So you have some imbalance here. Here you have some few imbalance there. Price. So we expect price, at least we expect price to come all the way down here in a corrective way, in a corrective manner, like this, then form this way, form this way, form this way. Sorry, pardon me for my drawing. My drawings are not really attractive though, but then we expect price to be great somewhere here, then up. So let's check the fit. So if you check a fit on the retracement, remember this place. This, let me take out this. I was trying to take a fit here. Let me take this thing off. Um, oh, come on. All right. So um, if you should take a fit from here, from the lower low to the higher high, where do we expect to see price? All right, so I think hold on. On the 1H, price broke bullish. On the 1H, price broke bullish. So on the 1H, for price is bullish. So it means here was bullish, here was bullish, here was bullish, here is bullish. What caused it? This caused a bullish. So then it means we are supposed to take our fit all the way from here. Oh, sorry. Uh, yeah, we can take our fit from um, this side. That is a lower low, because now this is now the 1 hour lower low now. This here now tends to be the 1 hour lower low now. So now this here tends to be the one lower low. So we can take our trade from this side that we see here to here, and then we see where does price retrace to the previous structures here. The area of interest here, sorry, it retraces into within the 61.8 region. So that's within the 61.8 region or the 61.8 area. So in here, anywhere here, price can be traced into. And then one something that I want to you guys to know is price has formed this line or this candle here, which shows that price can come and then form a liquidity and then push up and then come into this area of interest and then take off this imbalance out. So that is what we expect from the yen, and that is what we expect to see next week from the yen in a corrective manner and then take up. Or price could still come, and then we have how do you say it? We still have. Come on, come on. Oh, why? What is wrong with this thing? Okay, good. We could see price come straight in an impulsive way down and then form some descended corrective movement as it's formed here and then take up, or can form price can come straight down here and then form some ascending corrective movement and then what move downwards. So the price can do anything, so we expect to see anything from price, god willing, next week. All right, so that is it for the yen, and that is it for the episode 2 on today's Forex game plan on Trade iQuery, the Forex game plan on Trade iQuery channel or page. So if you are a first time here, kindly subscribe or follow to our page, like as well, and leave a comment. If you have any doubt or if you don't understand anything, kindly go to the description below, and then you get to see the link towards our Telegram group that we are there to discuss, to deliberate, to talk about trade, forex trading to be precise. And then we have each and every day we give out free trades as much as the market gives, and we also give it out. You can follow us on our social media platforms to also see what we have for you. All right, so thank you, stay safe, and then catch us on our next episode, on episode 3, on the game plan, on the Forex game plan for today. All right, so see you in a jiffy.